morning and welcome to Finance Pulse. Tonight we are tracking major shifts in the global economy, from oil prices climbing on renewed trade optimism to Bitcoin miners reinventing themselves for the age of artificial intelligence, and Amazon placing a multi-billion euro bet on Europe's digital future. But that's not all. In our deep dive, we'll decode a major move from Washington, President Donald Trump's new trade deal with Malaysia that could redefine the global rare earths market and challenge China's grip on one of the world's most strategic resources. So let's begin. Here are the top headlines of the day. Oil climbed higher today as hopes for a U.S. China trade breakthrough lifted investor confidence and bolstered the outlook for global energy demand. Brent crude pushed above $66 a barrel, while West Texas Intermediate hovered near $62, both benchmarks touching multi-month highs. The surge follows progress in negotiations between Washington and Beijing, where top-level trade officials reportedly reached consensus on several key issues, paving the way for a possible signing when President Donald Trump and President Xi Jinping meet later this week. Next, the world of digital assets is evolving faster than ever, and this time it's not about Bitcoin's price, but what miners are doing behind the scenes to survive the crypto winter. A growing number of Bitcoin mining companies are repurposing their vast data centers and energy contracts to serve a new master, artificial intelligence. Firms like IREN, Riot Platforms, TerraWolf and Cypher Miner are now signing multi-year deals to host AI workloads instead of focusing solely on minting digital coins. The reason is simple. AI computing is booming, while Bitcoin profits have thinned as mining rewards decline and energy costs rise. Meanwhile, in Europe, Amazon is doubling down on its presence in the Netherlands with a $1.6 billion investment over the next 3 years. The move, confirmed by the Dutch financial daily FD, is part of Amazon's broader strategy to expand its cloud and AI ecosystem across Europe. Eva Feig, the company's head for Belgium and the Netherlands, says the investment will help develop AI tools for entrepreneurs selling on Amazon's marketplace, giving small and medium-sized businesses new ways to scale and compete globally. And now for tonight's Finance Pulse Deep Dive. We turn to high-stakes agreement that could reshape the balance of power in one of the world's most strategic industries, rare earth minerals. Over the weekend, U.S. President Donald Trump and Malaysian Prime Minister Anwar Ibrahim signed a landmark trade and rare earths deal, a move designed to strengthen U.S. supply chains and reduce dependency on China for critical minerals used in everything from smartphones to fighter jets. The agreement, signed during the Asian Summit in Kuala Lumpur, commits Malaysia to keep exports of rare earth materials open and unrestricted to U.S. companies, while the U.S. formalizes a 19% tariff on Malaysian goods as part of the broader trade framework. White House officials described the deal as a strategic victory for both sides, one that ensures smoother access to vital raw material and incentivizes American investment in Malaysia's mining and processing sectors. Malaysia, which holds an estimated 16 million tons of untapped rare earth reserves, has also pledged to fast-track development of its domestic industry, extending operating licenses to increase production capacity. The timing is significant. Just weeks ago, Beijing imposed sweeping restrictions on its rare earths exports, a move interpreted by Washington as economic coercion. In response, Trump threatened 100% tariffs on Chinese imports and accelerated talks with regional partners to secure alternative supply lines. For context, China currently controls over 60% of global rare earth production and nearly 90% of processing capacity. Any disruption in this market could send shockwaves through global manufacturing, particularly in electronics and defense. This deal with Malaysia echoes lessons learned from the past. Back in 2010, when China halted rare earth exports to Japan during a territorial dispute, it exposed just how vulnerable even advanced economies can be. Since then, Japan and Australia have worked together to diversify supplies, and now Washington appears to be taking a similar path. So that's all in Finance Pulse for today. Follow the Finance 360 for more.